Good afternoon, everyone, and welcome to today's online mortgages Q&A. We've got a really great conversation coming up today around everything you wanted to know and perhaps were afraid to ask about buying a home, what's involved in that, and everything else. I think what we're aiming for today is a really kind of free-flowing conversation with plenty of time for questions and discussion towards the end. So I won't talk for too long at the start, and we'll get things underway nice and quickly. There are just a couple of bits of housekeeping before I introduce our two guests. The first of which is that, as you will have noticed from the sound, today's session is being recorded and being uploaded to YouTube. So if you don't want to appear, please keep your camera off, and we'll make sure that no one appears who hasn't got their camera on. The second thing I think that just to raise is that I think it's important to be clear that today's session is here to give you general information and guidance about mortgage products and the home buying process. And it's important to say that it's not financial or mortgage advice. If you would like information that is tailored to your own circumstances, or you need perhaps some guidance on which options might be right for you in your own situation, it's really important that you don't rely on the contents of today's session and instead you speak to a qualified financial or mortgage advisor. The good news is that our two guests today are those advisors. So if you would like to chat to someone about your options after this call, you can do that by booking a one-to-one call with us. But I think it's just important to be clear that you shouldn't be relying on anything or making any big decisions based on what you hear today. That being said, we hope it will be very useful. I'm sure we're going to have a really interesting and detailed discussion today. And so let's crack on with introducing today's guests. First up, can I introduce Lauren? Would you like to introduce yourself?
Hi, everyone. Thank you for coming on the call today. My name is Lauren, and I am the mortgage advisor for London Mutual Credit Union. I have been in the mortgage world for 18 years. So yeah, I have lots of knowledge around advice, and hopefully we'll be able to help you all going forward.
And Matthew, we've got you on the call today. Would you like to introduce yourself?
Hello, my name is Matthew Sweetlove. I'm Head of Lending for London Mutual Credit Union. I have over 20 years experience in unsecured lending, and I'm also a mortgage advisor for the London Mutual Credit Union, and I am CMAP qualified.
Excellent. So that's really, really good news. Nice to have you guys joining us today. And as you can see, lots of knowledge in this room. So we will do our best to answer your questions at the end of the call, and we'll have a bit of a chat before then. So I guess to kick things off today, Lauren, tell us a little bit more about your role as a mortgage advisor, and I guess what the role of mortgage advice is.
Yeah, sure. So mortgage advice is quite a vast subject. So I'm not going to bombard you all with the complete A to Z, but I think the most important parts of mortgage advice for myself is really kind of trying to understand and have a full discussion on what the client is looking to do. I think that is the kind of pinnacle part of the advice. It's understanding sort of goals and preferences, and also allowing me to give input as well, because it can be a very unknown territory for clients. So sometimes clients may have sort of preconceptions of what they think they want, but after we have a full discussion, then sometimes that can change. So that's kind of one of the kind of biggest thing is understanding the client situation. After we kind of get through that part, the kind of crucial next stage is kind of researching what is on offer for the client. And it's beginning to sort of look at proposed costs and what things might look like. No one size fits all in the mortgage world. So the conversation very much flows, and there's many options that can be given to the members. Nothing is set in stone. We can have as many costs sent out as we wish, and look at various options. And then once we kind of have got ourselves to that position, it's then looking to go ahead and have a decision in principle carried out, because until we know if lending is completely possible, then we're never going to know. So it's working our way through the stages. As I've said, there's many sort of A to Zs here, but I think that the overall thing of an advisor is really managing expectations, being there from the very beginning to the very end, full application process, and just helping the member every single step of the way.
So Lauren, what sort of stage in the process do you tend to speak to people at? Is it worth coming to you if you're kind of thinking about it, or yeah, how far down the process people tend to be?
Oh yeah, I mean, I would encourage a conversation at any point, to be honest, for a mortgage. Sometimes I speak to to clients who are not looking to do things for maybe 18 months up to a year. But I think it's important that, the member, the client, understands, what the process is and maybe things that they may have to prepare for. So yeah, conversation can take place at any time, and I am more than happy to speak to anyone, even if they're just putting their toe in the water.
That's really good to know. And does it cost anything?
Nope, advice is absolutely free, so I am here at all times for advice.
Well, I mean, clearly, Laura, and obviously, you talked a little bit about your background and the fact that you've been in the mortgage business for a long time, and so I think it's pretty clear your stuff. But I guess in terms of just so people understand your role, is there kind of like a legal difference between regulated advice versus just kind of speaking to someone who's been through it recently, or to a friend or family member?
Yeah, I think like anything in life, I think that conversations can come from all different avenues, and I think that we can all absorb incorrect information and parts of information that are correct. So I would always encourage someone to speak to someone in the know. Google is our trusty friend, but is not always to be relied on. So yes, I would absolutely say that getting information from friends and family is also a good way of achieving that. But I think that you really should be speaking to someone who is in the know and able to help.
And what about ChatGPT?
Well,
probably not. Fair enough. So I guess in a nutshell, your role is to kind of guide us through, what can, let's face it. I mean, it can be a pretty complicated and complex process, that process of buying a house. Matt, I wonder whether you wanted to come in here and kind of talk us through what that process looks like. So if I'm in a situation where I've got a deposit, I've got a rough idea of how much I can afford to borrow, what sort of property I might want to buy, and I'm ready to get that process started. What kind of happens there through over that sort of that period through to me getting the keys and moving into my new home?
Okay, I'll give you a short overview. Obviously, it's quite a long process, so I don't want to put everyone to sleep as well. So basically, first of all, you need to start working out, basically, have an idea of what you might actually get from a lender. So to get that, that's called a decision in principle. So basically, like with us, for example, you can go to our website, get decision in principle. It's quite a simple process. We'd go through your, or basically you give us your personal details, information what you're looking for, and some rough income expenditure details. And then based on that information, we can say, in principle, we could offer you a mortgage for X amount. So therefore, you could then go out and find a home within your budget. The way that we work out the affordability, we do 4.5 times your income. So we do it on joint income. So if you're both working, you can both apply, or you can apply if you have up to 4 applicants as well, which is great. So it could be you and a family member, or you and a friend. So once you have your agreement in principle, there's no ties with agreement in principle. It doesn't cost anything. There's no commitment. We will do a soft search credit check. So it won't leave a footprint on your credit file, and no other lenders will see that checks. It's completely no committal, absolutely fine. So once you have your decision in principle, most estate agents will not let you view properties until you have a decision in principle in place. So it's quite a useful thing to have. Some will, some won't. For example, I live in Ashford in Kent, and all my local ones, they will not provide, they will let you view properties until you have a decision in principle in place. So once you have that, you then have your amount that you have set. Well, basically, you have your agreed amount, and then you have to find your property. So once you have a property, you have an idea what you want to go for. You make your offer, and once you make an offer on the property, it's sold subject to contract. So obviously, there's no exchange of money at that stage. It's just saying that you're interested in buying that property. Once you're ready there, you then come back to Lauren or to myself and complete a fact find call. A fact find call is basically, it's an hour conversation to go through the ins and outs of your personal details, your income expenditure, and your financial commitments, and looking at the products that are available to say, okay, so these products we have, which would be best for you? Obviously, we would like to give you a mortgage every single time, but sometimes we can't offer a product if it doesn't fit your needs. So it must be a product that fits your needs now and in the future. Okay. So once you have your fact find completed, we'd invite you to, or basically we'd issue with a mortgage suitability report and a ESIS, which is a European standardized information sheet, which gives you all the details, the ins and outs about the mortgage. Should be the loan amounts, interest rates, repayments, any fees, any costs, and so forth. once you have that in place, we can then, and then you're happy to proceed, you then go on to full application full application, and would help you and assist you to put the application in for the panel to review your request. Okay, so once you have your decision in place, we'd then have to complete a property valuation. So there are different types of valuations that you can have. From the mortgage itself, we need a property valuation to confirm the value of the property that you'd like to purchase. There are also home buyers and full structural. Obviously, with each one of those, there's a different cost involved, which we can provide you details of later. And once you had the valuation completed, you'd then need to instruct solicitors to assist you with the home buying process. Okay, so we use Wilkin Chapman. You're free to use your own solicitors, but it must be a two-partner practice at least, and you must have indemnity insurance for at least £2 million. So anyway, Ben, you have any questions or ask at this stage before I continue?
No, we'll come back to questions at the end. So Matt, it's quite a long process, and I think the important thing to say here is obviously that both you or Lauren are there at the end of the phone and helping to kind of to guide the person through that process. So it's hopefully no one here is kind of scribbling down notes and trying to memorize all of that. It's very much, I guess, one of the benefits of working with us is that you kind of help you through that process. So you get to that stage. How long till I get the keys and I move in?
Okay, so the next stage there is the conveyancing process. So what happened there is they'll do the searches on the property, such as the title and the contracts. The solicitors also help you to because if you're buying a house, if you're a first-time buyer, it might be nice and quick, but then the person you're buying the house off, you could be in a chain. And chain basically means that they have to sell their house first of all. So the time it takes to process the application, it can take between 8 to like 16 weeks, depends on the process or what's actually involved in buying the property. If you're a first-time buyer, generally it is quicker as you don't have a chain, but obviously if the person is buying, then there could be another chain involved in there. Once you have that process, the conveyancing process takes between roughly about 8 weeks. And once you have that, you then have the exchange of contracts. At that stage, you exchange your contracts and you're legally committing to purchase. And then we have the completion date, which is set usually 7 days after the exchange of contract. And at that time, you then get your keys.
He's moved on and it's happy days.
Yeah.
So with Lauren, I wanted to sort of go back because at the start, Matt sort of talked a little bit about this kind of decision in principle and obviously the way he's explained it, that in many cases is kind of the entry point into the mortgage process. So does having a decision in principle, does that guarantee that you're going to be approved for a mortgage?
So no, it doesn't guarantee. It's approved in principle, and what in principle means is that the checks that we do up to that point is ticking the boxes. However, when you then find the property and then full application is submitted, that's where there's just extra checks that are done. So it could be as simple as possibly a property that's purchased maybe just doesn't suit our criteria, so that could then rule out that property. I have had examples in the past where I've had clients who have been approved in principle, and it's been a few months down the line, and they've purchased and come back. But in between there, they've maybe taken out quite an expensive car loan, and then that then would change affordability. So it's not fully guaranteed, but up to that point, if everything stays and remains the same, then I don't see why approval, onto the further stage should fall through unless there is situations as I've just sort of mentioned.
So I guess, just to sort of to perhaps sum that up in a slightly different way, it's a case of the mortgage provider is saying, if everything that you're telling me is true and stays true, then at this stage we can't see any reason why we wouldn't offer you a mortgage.
Potentially, yes. Yeah.
Potentially. Yeah. Okay.
Potentially. Okay. My favorite word.
And obviously Matthew also mentioned that lots of estate agents are looking for you to have a decision in principle before you can put down an offer on a property. So at what stage should people be thinking about getting that decision in principle?
So it gives comfort. So I would say that, because circumstances may change along the way. I always ask clients to, we don't really do decision in principle really until they are committed and out there looking at stuff. I can give costs and everything right up to that point, but it's really not until they are actively out there looking that I would say we're probably now should look for the approval in principle.
Okay. So do I need to have a kind of like a specific property in mind, or just be actively looking?
Actively looking. I always say that we need to get the numbers down first, and we need to make sure that you can achieve what you want to borrow first. I always say to clients, using an advisor, don't be a stranger. It's a case of, you're constantly in touch with what you're looking at, types of properties. Let me see, because if I can weed out anything that's going to be a problem in the beginning, it then saves the heartache further down the line.
Gotcha. So if I'm at a stage where I know that I'm looking to buy in the in the next few months or whatever, I know what my salary is. I've got a rough idea of what sort of deposit I might have. I kind of know the area and the sorts of, I've done my bit of research in terms of the kind of the cost of the property I want to buy. That's the point at which to probably have the conversation with you and to look at getting that decision in principle.
Yeah, absolutely. Okay. Yeah.
Great. So I guess next question is obviously for you, Matt. We and I'd like to kind of move on to talking about mortgages specifically at LMCU. So I think as everyone probably knows on the call, one of the reasons why we're having this call is that a short time ago, London Mutual became one of the first credit unions in a number of years to begin offering mortgages. And so, Matt, I wondered whether, if as the kind of the head of lending and the head of mortgages, you'd perhaps kind of give us an overview of what's on offer and why people might want to give LMCU a look if they're considering getting a mortgage in the next few months or years, or even further than that.
Yeah, of course. Yeah, okay. So I'll give you a nice quick overview of the benefits of our products. So with London Mutual Credit Union mortgages, we do not charge any advice or product fees. So when you come to us, you don't have to worry about that, which is perfect. You can also overpay your mortgage. There's unlimited overpayments. If you close the mortgage within the product term, there's a 2% completion fee, but otherwise you can pay any amount. So say, for example, you have £100,000, you want to pay 10 grand off, that's fine. But like some other providers will have like
so that might be like if you inherit some money or happen to come upon some money, you've got the option, I guess, of overpaying without paying a penalty for that.
Yeah, that's right. There's no penalties for paying early, as long as you do not close it within the product term.
Gotcha. So as long as you don't pay it off in full, you're free to pay. If you're lucky enough to be in a position where you've got some extra cash each month that goes above your repayments, we're happy to take that.
Exactly, and it's also great because obviously, like, if you are overpaying on a regular basis or just one off, you're reducing the interest, so therefore your term will reduce. That will save you money.
So you pay it off sooner. Yeah.
Pays off sooner, saves you money. So that's
it's crazy that some lenders do charge those extra fees, and it's good to hear that we don't.
Yeah, we don't. Our products are also open from the age of 18 to 75. We consider different types of income as well, which is great. So if you're employed or self-employed, if you're also working for the NHS, if you're doing bank work, we can also take into account your irregular income. So say, for example, you do extra hours in the bank and you do it for the last couple of years. If you can show us 12 months worth of income for the NHS bank staff, we can take into account 75% of that income on top of your existing income, which could help you pass affordability.
And is that just NHS bank income, or is that anybody who has a sort of a job where their pay might change from month to month?
Yeah, the pay month to month, same as well. So obviously it does depend on an individual case if it's not NHS, but obviously provide what you have, we'll go through and see what we can do in relation to your individual circumstances. Some it may be 50%, but obviously it depends on the circumstance of the actual case we're looking at.
Okay. So, but I guess that the message there is that we will try to take into account as much of your income as we can. Yeah, even if it does change from month to month. And Lauren, I wonder whether I could bring you in here in terms of, well, perhaps both of you in terms of kind of talking a little bit about rates, because I guess particularly if you're already a homeowner and you're perhaps considering remortgaging, particularly in the current environment. Rates are really important, and you know, we all know that rates have gone up quite a lot over the last few years, starting to come down, but it's obviously still a key consideration for people because it affects how much their mortgage costs them each month. So you know, without going into too much detail about the specifics of our rates, because those are all available on our website, I wonder whether perhaps either or both of you could tell us a little bit about how those rates work and things like that.
Yeah. So London Mutual set their standard variable rate, and that standard variable rate is offered to members. Okay. But alongside their standard variable rate, they also have a discounted rate as well. Now, there's two different discounts, and I'll probably go on, or Matt might go on to sort of loan to value, but you would either fit into one or the other, depending on the loan to value. So yeah, so these rates are discounted. They do come with the terms and conditions, so it is worthwhile checking it out online, and obviously speaking to Matt and myself, that's where we will be able to guide you. But you know, the discount on the variable rate is very generous, and a very, very good, decent interest rate that has been offered by London Mutual.
That's really interesting. I think we were comparing it before this call, and we were looking at where it compared in the market, and I think you know, it's definitely one of the better rates out there. It certainly was the time this is as of today. So Lauren, obviously our rates are variable. What does that mean in practice for people that don't understand the different mortgage types?
Yeah, so it means that you can essentially take the rate for either 2 years or 3 years. Okay, so there's different options, and that will be discussed once you've purchased and once we start digging deeper into where you want to be with what rate. What that means is, with it being variable, the rate could increase, but also could decrease, depending if London Mutual Credit Union decide to alter their interest rate. So there is always the chance that there could be a fluctuation. But that's essentially what variable means. Your rate could vary throughout the term.
And that's really interesting. Okay, and we're going to come to the Q&A at the end, but I can see a couple of questions which are specifically relevant to this one, so I'll chuck those in if that's all right. Got a question here around the minimum deposit required for a first-time buyer, and I know you were going to talk to us a little bit about loan to value and what that means. So that's probably good. You know, perhaps we can cover that as part of your answer there, Lauren.
Yeah, sure. So to go to the question specifically, first-time buyers or any purchasers, we do require a 20% deposit. Okay, so that kind of leads us on to loan to value. So trying to keep it as simple as possible, loan to value simply means the size of your mortgage, the loan, compared to the value of your property. Okay, so as an example, let's just say that the first-time buyer has purchased the property for 150,000. All right, so they would need to put down a 20% deposit. So that would be 30,000 pounds that they would need. And then what that determines is that then means it's loan to value is 80%. So then that allows, as the advisor, to go on to check what rate is applicable for that 80% mortgage. Okay. Obviously, bigger deposit, you are able to potentially receive a slightly lower interest rate. But that's what the role of the advisor does for the client, is kind of works out where they fit in that category.
So generally speaking, the kind of the bigger your deposit is compared to the price of the property you're looking to buy, the better the rate you're gonna be getting.
Yeah.
And that's true of remortgages as well. We're obviously talking about deposits here, but you know, we could be talking about the existing equity you have built up in your house. The more of that you've got compared to the size of the property, you know, the price of the property you're buying, that's what we're talking about roughly when we talk about loan to value.
Yeah.
That's really and I guess, Matt, I wanted to bring you in here because obviously we're talking about, you know, obviously one of the things which makes us different as a credit union is our common bond. Could you explain to everyone a little bit about how those common bond rules work?
Yeah, okay. So obviously to join a credit union, you have to live or work or study within a certain catchment area. As most of you here are members, you know how that works. So for us, it's live or work in Suffolk, Lambeth, Westminster, or Camden. You can also join if you're a member of the MOD, also London Ambulance Services. And basically, if you are looking to buy a property and you live with someone else, and say, for example, you don't live in the catchment and your partner doesn't live in the catchment. Sorry, so if you live in the same address, basically you're a family member, so they could join as a family member. So even though they don't hit the common bond to join, because they're living with you at the same address, they can join as a family member. So you could both join and get the mortgage together.
But in a nutshell, so we can have up to 4 applicants, but if you had 4 applicants, all 4 of those people would have to fit within the credit union's common bond.
That's right, yeah. They must all be within the common bond. Unless obviously their family members live at the same address as you, and then they could join.
That immediately qualifies them to join. So if it was, for example, partners, domestic partners, or people who are married, then generally speaking, it's not going to be a problem.
Yeah, absolutely fine. Absolutely
fine. And we've already sort of talked a little bit briefly. I think while we're on the subject of the common bond, you mentioned, people working in healthcare, and we've talked a little bit about kind of the support for NHS bank hours. And I think just now you talked about people, in the Ministry of Defence. So that's all members of the armed forces who, an important part of our membership here at London Mutual. And tell me a little bit more about what we can offer those groups.
Yeah, okay. So one scheme which we are taking part on is the Forces Help to Buy. So basically, if you are a serving member of the MOD and you're looking to get on the housing market, obviously it's quite difficult. You could take a loan, an interest-free loan from the MOD up to 50% of your salary, up to £25,000 capped. So that loan you could then repay also in line with your existing mortgage, but obviously as it's a loan, it's interest free, so it doesn't cost you anything, and you can take it up to 10 years, and that interest free loan can be used for the deposit, the legal fees, or the estate agent fees.
So it's all about making members of the armed forces, making it a little bit easier for them to buy and purchase their own place.
Yes, yeah. So you get the first step on the ladder basically. And the Forces Help to Buy, it's a great scheme, basically, interest-free. Obviously, we wouldn't encourage you to go to the maximum just because you can, because it's not free cash. You still got to pay it back. So when we do our affordability repayments, we do take into account the mortgage repayments, your existing commitments with other creditors, and that would also include the Forces Help to Buy. So if you are looking to use Forces Help to Buy, go for the amount that you need. Don't just max it out because it's there as a facility. But be sensible and look at your affordability.
And I can see that particular offer's got a lot of people's attention here, and obviously I think it's important to be clear that that's not something which we ourselves provide. It's something provided by the Ministry of Defence. So it's unfortunately, I think as far as I'm aware, I think this is the only scheme of its kind available to members of the armed forces. But I think that it is worth talking to your employer to see whether there are other similar schemes which might be available if you work in healthcare or social services or social care. But as far as we're aware, I think it's quite a unique scheme for members of the armed forces, but one where we're able to cater to people who do use that scheme.
Yeah, so if the MOD are interested, you can go to your JPA system and go to the self-service section, and there's a link on there for Forces Help to Buy. Will give you more information, and sure they'll be able to guide you through.
And it's worth just recapping, Matt, the offer that's available. I think in terms of what we can do for people working in the NHS, just that stuff around bank hours. So just remind us about that.
Yeah, so bank hours, we can take into account 75% of your bank hours income, but we must see proof of that over a 12-month period.
Okay, so if you've been sort of regularly doing from month to month a fairly similar amount, and you've kind of come to rely on that as an important part of your income, we're going to be able to take that into account and be able to take that into consideration.
Yes, take into consideration.
That's really good. So I can see that the questions are coming in thick and fast, and I'm very keen for us to jump to answering some of those questions very shortly. So I think in terms of kind of wrapping up the kind of conversation part of today, I think if any, we've talked a little bit about the kind of the home buying process. We've talked a bit about what's on offer here at LMCU. So if someone on this call is saying, right, well, this all sounds good, this sounds interesting, I might be, this is worth exploring further, and I'd like to chat to someone about mortgage with London Mutual. Lauren, I'm guessing the first step is probably to have a chat with you. So could you tell us a little bit more about what to expect and how that works?
Yeah, yeah. So, members can call. All you have to do is go onto the website, London Mutual website. My contact details are on there, so you're able just to call me directly or to drop me an email. And then what I would do is I would just schedule in when you're free and I am free, to just have to start with quite an informal chat, just to kind of gather up what you're looking to do. And as I said before, that chat can start at any point. You don't have to be ready for purchasing. Even if you're just, setting out the kind of groundwork and just kind of getting to grips with how things work, I'm happy to hear from anyone, really.
And at what stage would someone be committed? Because I guess one of the things that might be holding someone back is that they're still looking at their options. They're perhaps considering a range of different lenders. So I'm guessing having a chat with you doesn't tie people into anything.
No, absolutely not. No, I just give as much advice and information as possible. And I think that's a really good thing in this market, essentially. I think that the more, advice and information we have behind us, I think it gives us clearer decisions in which way you want to proceed.
And I'm not sure whether we've touched on this already, but the mortgage advice that we provide at London Mutual, is that free?
Yes, absolutely. Yep, free advice. Yep.
So that no extra cost for having a chat with Laura, and I'm sure people will be very pleased to hear that. Well, so I think we're now at the stage in today's session where it's your chance to chip in on the conversation and ask some questions. I can see some questions already that are in the box. If you would like to ask a question, feel free to type it in. And what we'll do probably over the next kind of 15 to 20 minutes is try and answer as many of those as possible. And perhaps if they raise kind of additional topics that we perhaps haven't got to, we can follow up on some of those as well. So I've got a question here in terms of can people come to us directly, or do people need to come through a broker?
We don't use brokers, so just come directly to us, please.
Okay. Well, there's a fairly simple, straightforward one. Don't need to use a broker, and actually, in most cases, we're dealing with you directly. So come to us, come and have a chat with Lauren, and we'll take it from there. Got another question here. What are the age limit rules around mortgages?
Okay, so you can take a mortgage from the age of 18 to 75. Obviously, you'd have to repay the mortgage in full. We only do repayment mortgages. So that basically means that you're making payments towards the mortgage, and by the time it comes to the end of the term, the mortgage will be finished and the house is yours. We don't do interest only. So obviously, we take into account affordability over the whole term of the mortgage. So if you're working up to 65, we'll take your income up to 65. If you're going into pension age, we look at your income into that as well.
So the kind of the main principle there is that you need to have paid off your mortgage by the time you're planning to retire. Is that right? So,
or you can also go into pension, but we'd have to look at your pension income as well. So after this call, if anyone wants information about pension income and how we take it into account, we'll happily share that with you as well.
Okay. So the key thing there is making, we need to be confident basically that you're going to have an income and a way of covering those mortgage repayments throughout the entire length of the mortgage.
Exactly, because we don't want the person to be struggling. Obviously, like, you need to be able to afford to pay your house and also live in the house. You can't just live on bread and water and just pay your mortgage. It has to be affordable for you and comfortable for you. Otherwise, we wouldn't be doing our jobs right. Basically, we have to make sure that it fits your needs.
That's protecting you as well as ourselves. It wouldn't be right to lend more than someone could afford. And that's very good to hear. Another question: can I buy anywhere outside of London, or am I limited to within London?
You can buy anywhere in England or Wales.
And are there any other kind of requirements on what sort of property it needs to be?
Yeah, it's a residential properties only. So basically, you have to live in the properties. We don't do right to buy, I'm afraid. And you can't buy second homes with us, but we do first charge mortgages. So if you're looking to move, say for example, like I work in London, but I live in Ashford in Kent, so I travel in every day basically. It's quite a long travel, but it's a good travel. But the house prices are much more reasonable, and I can afford to basically pay a couple of the travel costs coming into work. So yes, anywhere in England or Wales, if it's a residential home that you're going to be living in, you can buy that, as long as it obviously meets their requirements for the property type.
Mm-hmm.
Great. And we might come back to those requirements around the property type in a second, Matt, but I want to get in as many questions as possible. I think this one's probably a good one for Lauren. In terms of salary, is there kind of like a minimum salary that you need to be earning in order to get a mortgage?
I mean, you know, as long as there's income coming in, a mortgage is always possible, but it may not be the amount of mortgage that you'd be looking for. Obviously, the more of a salary, the higher mortgage if possible. But this is where, you know, during our conversation, all income will be taken into account, and any income that we can use, which is additional to salary, will be factored in, and then that's where, you know, the kind of top end figure will come out of how much can be borrowed. So yeah, I mean, as long as you are earning something, a mortgage can be possible, but may not be enough. Yeah.
And I think earlier in the call, either you or Matt mentioned this kind of 4.5 times income
That's
figure.
right. Half-time income. That's right. Obviously, like you also need to think about as well as your existing creditors. So if you do have other creditors, it's best to like run your own credit check. For example, with Equifax or Experian, look at your record, see if there's any missed payments. If there are, look to basically rebuild your history. If there's any defaults, look to clear those defaults. Obviously, a default is non-paid debt or a county court judgment. Pay those off first of all, and then come and approach us basically. But you need to make sure that your finances are in order, and that you basically can afford the mortgage and your existing creditors over the term of the mortgage and also the loan.
So that's a good tip. Get your sort of, you make sure your credit file is clean and as clean as possible, and you know that will help to make the process run more smoothly and increase the chances that we'll be able to offer you something. And I think, you know, just important, I think really important to underscore that 4.5 times figure. So if you're looking for a rough idea of how big a mortgage it might be possible for you to get, and this is, you know, the emphasis there is on the might. What you want to do, roughly speaking, is take the size of your deposit, and then on top of that, you can add to that 4.5 times your income. So take your annual salary, times that by 4.5, add your deposit on top, and that gives you a very, very, very rough, and I should say that it's an extremely rough idea of what might be possible. But obviously that all comes down to the conversation and what size of repayments you're going to be able to afford.
Yeah, and also on our website there is a mortgage calculator as well. So if you put your income in there, you can play around with that a little bit, and you can work out the maximum amount you can apply for.
Thanks for that, Matt. I think a really interesting one coming in here. This member, they say they're the owner of a healthcare agency, so presumably kind of self-employed, run their own business. What sort of documents and trading history would they need in order for us to be able to consider them for a mortgage?
So self-employed are absolutely fine. You know, we would require their sort of tax. I call it an SE 302, but I would always guide the client on what that looks like and things. But it basically is a document that shows how much income has been made. I always would ask for 2 to 3 years worth of income. And then it's kind of calculated sort of on like an average basis. Self-employed is a little bit more technical, but you know, we can always arrive at a decision for a member and how much they can borrow from their sort of tax documentation.
Great. I think that makes things a little bit clearer, and hopefully that's useful. But if we haven't answered anything there, happy to see any kind of follow-up questions around how we can work with self-employed people, or indeed, I'm sure Lauren would be happy to talk about that on a kind of individual case-by-case basis.
Yeah.
Couple of questions here around the kind of the right to buy scheme and council discounts. I know, Matt, you mentioned earlier that's not something which we're able to do right now. Is that right?
That's right. I'm afraid we don't offer right to buy at this time.
Okay. So I guess in terms of schemes that we are able to support, so lifetime ISAs, those are okay?
Yeah, if you have a lifetime ISA, yes, that's fine. That's okay.
Okay. So at the moment, I guess the key ones are lifetime ISAs and forces help to buy. That's
right. Yeah, they're the key ones for us.
Great. Here's another one around I guess kind of credit scores, and if there's a kind of minimum credit score required. I mean, generally speaking, what are the kind of the rules of thumb, and what are our rules around kind of people's credit history? I know, Matt, obviously the answer there is kind of as clean a credit file as possible, but can you give us any more kind of steer beyond that?
I can give you a little bit. Obviously, it's kind of individual circumstances, but basically, if you have a CCJ, you've got to pay those off. You've got to pay your CCJs off. If you've got defaults, you've got to look to clear those defaults off. We may be able to consider defaults up to, say, for example, £500, but I would strongly advise that you look at your credit files, like for example, use providers such as Equifax, and run a search, and also all the information about the debts that you may have. Because basically that information is what we're looking at, so you should see the same. So if you have defaults, let's pay them off. If you have missed payments, get back on track. If you have returned direct debits on your bank statements, sort that out before approaching us. So basically, one thing we see all the time with people is that they have direct debits set up on their bank accounts and they get paid on the 25th, but the direct debit's on the 18th or the 24th. It's like so basically, if your direct debits are not enough your salary, I would strongly advise that you contact the providers and get them in line, so therefore you don't miss payments. Because obviously, when we do our affordability assessments, we look at your income expenditure, and part of that is looking at bank statements. So if you do have return direct debits, get on top of those, get those in track, and get your credit file as clean as possible before applying, please.
Okay. And I guess connected to that, there's an interesting one here in terms of if you're buying with someone else and your partner earns a higher income than you, but perhaps has a slightly lower kind of credit rating. I mean, how does that work in terms of does the credit check happen on everybody, or how do we, the combined income? How does that work if you're buying with someone else?
So the combined income, we just take as a total 4.5%. The credit check will be done on both applicants. So you do need to make sure that your finances are in order before applying, please.
Great. Here's an interesting one, and it might be one where we need to come back to this individual. But this individual says that they're buying at auction, and they're considering using an auction to buy their home as their kind of primary residence. Is that something which we might be able to help with, or is that one where I'm not sure, Matt.
But Lauren, what should you advise on that one?
Auction, I don't deal a lot with, Matt, so I don't know if you have more sort of maybe around that than I do, or maybe we can come back to the member.
It's something to come back to you on, but it's a possibility. But obviously with auction, if it's either a standard auction, you have to complete time of the hammer going down, or if it's a modern auction, you've got 30 days to complete. So you need to take into account that the whole conveyancing process would have to happen in 30 days. So you may want to talk to a specialist first of all before talking to us, because that is not something that we usually do. It is possible, but I would advise that you speak to a whole of market broker first of all in relation to modern auctions.
So it's one where we're not necessarily saying it's definitely out, but certainly if that's the route you're thinking of going down, it's worth having a kind of a one-to-one chat so we can get a detailed understanding of your situation and whether that might be something which we can help you with here.
Yes.
Next question, I imagine, is one which is kind of common to lots of people on the call today. Particularly if they've kind of been long-standing members of LMCU and with us for a number of years. Would someone be able to take a mortgage with us if they're already paying a personal loan from LMCU?
Yeah. So, go on, Lauren.
No, I was going to say, it all just comes down to affordability, as Matt had mentioned. All scenarios are taken into account, and as long as the mortgage is affordable at the end of the day, with any type of credit in the background, then yeah, absolutely, yeah.
So I guess the key thing there, and we keep on coming back to this point, is we just need to make sure those mortgage repayments are affordable, right?
Are affordable, yep, absolutely, yeah.
Marvelous. If you have a mortgage with Help to Buy, would you be able to remortgage, or do you need to clear that first?
You can. Oh, sorry, Matt. Carry on.
Go on, Lauren.
No, carry on.
No, it's fine. It's all yours.
No, I was just going to say that with the Help to Buy, maybe you might actually be able to help with this, Matt, actually, because I presume that you can move it over, but I don't know if I'm correct with that or not, actually.
You can, but it has to be over after a certain period of time, which we can
yes
after the call, basically. So yeah, it is a possibility, but it's best to talk to your provider first of all, and then approach us, and then we can give you more advice on that. So if you want individual advice on that, talk to us afterwards, and we can help you.
I think I think some of the questions on today's call have definitely putting us through our paces here. But I think if nothing else comes across, I think it's that we're whatever your situation, I think we're happy to have a chat with you and to talk about and look at your circumstances and see if there is a way forward. Nothing's ever guaranteed until we kind of look at all your details, but very much kind of happy to have that initial chat and to look into some of these things. I think a couple more questions before we wrap up, hopefully a little bit more straightforward, guys. One of which is 10% deposit, I'm guessing that's not something that we're able to help with right now. And I think, at the moment, our loan product is, I think, a minimum of a 10%, a minimum of a 20% deposit. So,
Yeah.
we might not be, I think it's always worth saying that we might not be the right mortgage provider for you, if in some of those situations. In terms of the kind of the minimum length of the mortgage, what are our guidelines around that?
You can take it from 5 to 35 years.
Okay, so you could have a mortgage for as little as 5 years, but obviously those repayments need to be small enough to be affordable. So you couldn't have probably most people wouldn't be able to afford to buy a whole property and purchase it over 5 years.
That's right, but we start our mortgages from 20,000, and you can go up to 450,000.
And,
Yeah.
and that's in addition to your deposit or any existing equity you have.
That's right.
And I think I'll pick up on this one. I think because this individual's asked a couple of times in terms of our mortgage interest rates. Mortgage interest rates, they're on our website. If you go to creditunion.co.uk and click on mortgages, you'll be able to see those right at the top. Forgive us, the reason we're not going into detail today on the call is that the minute we kind of start mentioning specific mortgage rates, there are additional requirements in terms of things that we need to make you aware of and information that we need to give you. And also our mortgage rates change on a regular basis. So we don't want to be giving you information which might soon be out of date, which is why if you are interested in what our specific rates are, as I say, you can find them on our website. Final one. Let's just return back to this point around kind of mortgage age and around age and mortgage duration. Matt, did you want to just kind of explain that one more time?
Yeah, so you can take a mortgage from the age of 18 to 75. Obviously, we need to look at your income over that period. So if you're working at 18, for example, and your income ratios are affordable, then you could take it from the age of 18. If you're still working in your 70s and your plan to clear it before you're 75, that's also fine. But obviously, it all comes down to what income you're receiving over now and the full term of the mortgage, which is affordable for you. So if you're still working, salary income, fine. If you're on a pension income, absolutely fine as well. But we need to see proof of that income over that term, which is affordable, and we'll stress test on the amount that you'll receive for the full term.
Great. And I can see a question around remortgaging, and I think it's fair to say that pretty much everything we've talked about today applies equally to first-time buyers as well as remortgages.
That's right. That's right. So with remortgages, all our rates are on our website. Please visit our website. We've got some really good rates on there. So it's for first-time buyers or remortgages, or if you're an existing homeowner and you're moving to a new house as well, you can also use us as well. Absolutely fine.
Perfect. Well, I think we're pretty much out of time today. So thank you everyone who joined us today and for all the questions. I think it was a really interesting discussion. I guess as a sort of way of rounding us off, and forgive me guys, I'm going to put you on the spot here, but it'd be great to hear from each of you, from both you and Matt and Lauren. What's the one thing that you hope people kind of take away from what's the one message you hope people take away from today's call?
For me, it is, I hope that you feel that we are open enough and willing to listen, and it's a case of come and explore. It's free. It doesn't cost you anything, and you never know what the discussion might end up opening up for you. So yeah, I'm here to help whenever anybody needs my help.
Matt, any final thoughts?
Yeah, but mine is basically like, it's good to have people here. Please check our rates up because they are really competitive, and we really want people to take out mortgages which are affordable for them, and they're great products. They're really good products. Yeah. Like no early repayment fees, no arrangement fees, no product fees. Obviously, you have to pay your own solicitor's fees and the valuation fee, but in relation to like paying like a product fee at the start, it's quite good. It's really good rate. I'm quite pleased with that. And also another thing as well, if you're not going to take a mortgage, please look at your credit files and just get them in order. So therefore, if you want to do something in the future, it helps you. You'll get better mortgage rates, you'll get better loan rates. So please check your credit files.
Yeah. A very good and helpful note to end on there. So thank you very much for joining us all today. Thank you for giving us an hour of your Tuesday lunchtime. I've really enjoyed the discussion, and that's everything from us today.